Hello and welcome to Fintech Insider Insights. My name is David Brear, and in today's episode, we're going to be asking, is FinOps the key for Fintechs to ride out the economic storm? Make no mistake, Fintechs and the wider financial services industry are currently in a stress test with all sorts of costs suddenly being put under scrutiny. Cloud-based services can be one of those costs that are being put under the microscope, but would it be wise to move away from a system that has actually made the fintech revolution possible in the first place? So in this show, we put together a panel of amazing experts to discuss the overview of cloud and FinOps today, how the industry faces into the current downturn, and what will the future look like with or without, I guess, cloud-based services. We'll discuss all of this and much more on today's show. But first, a few brief messages. Don't go anywhere. A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customer's relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Buying a home is the biggest and most significant purchase most people make in their lifetime. And it doesn't matter where in the world you're buying, the process is rarely easy. In our latest report, experts from our 11FS Ventures team look at why the home buying process is broken, how we can fix it, and the massive commercial opportunity it presents for banks and fintechs. Download your free copy at 11fs.com/homebuying. That's 11fs.com/homebuying.
All right, let's get started. As always, I'm joined by a panel of amazing guests who can shed a little bit more light on this super interesting topic. First off, it is a welcome return to Fintech Insider for Ewan, who is the Group CTO here at 11FS. I was just teasing you before we started recording, Ewan, about having some headphones on, but it's lovely to see you back on the podcast. How are you doing, my friend?
Yeah, I'm good, David, thanks. It's a bit of a shock to be here, but we'll see what happens.
Well, thank goodness this isn't live, everybody, is all I'm saying. But yeah, there'll be lots of edits, I'm sure. But we also have a debut on Fintech Insider for Stathis Onasoglou, who is the principal architect over at Google. Welcome to the show. How are you doing?
Hi, David. Good to be here. Thank you for having me.
No worries at all. I mean, with that title at Google, I reckon you're going to be pretty well versed on actually this conversation as well, right? So we've picked a pretty decent guest for this.
It's a pretty interesting conversation and very, very topical. I probably have one of the most interesting roles at Google. I'm what we call basically a financial services industry principal, and that means basically that I get to spend my time in three main aspects. One, working very closely with CTOs and CPOs to help them define their technology and data strategy to support things like product launches, expansion to new markets, and so on and so forth, to doing a little bit of research, trying to have an opinion in terms of what are the most relevant topics in the industry, anything from regulations to anything on new value chains. And last, I spend a little bit of time to write up, blog, or speak in public events about all the great things that our customers are doing.
Very good, very good. I mean, you make that sound like it's a lot of fun, but speaking to big CTO bank, it's not all as fun as it sounds in that way. But we'll come to that as we move through the conversation in that way. But last but absolutely by no means least, we also have Regina Lau, who's the Chief Financial Officer over at Weavr. Great to have you on the show, Regina. How are you doing?
Good, thanks for having me.
No worries at all. For anybody who hasn't heard of Weavr, what do they need to know? And tell us a little bit more about your role over there.
Thank you. Yes, so we are an embedded finance platform. We launched in 2020, November. So we've been live for just a little bit of time. And we've been quite lucky. We've grown quite well. We've raised some money and have some really great investors. We actually just recently completed an acquisition of an open banking platform. They're focused more on B2B. And so between that and the growth that we've had in the last 2.5 years, I think we're pretty excited about our future.
Very cool. It's going well when you start buying other people in that way, I guess, in that sense. But all right, well, we better get on with it because this is a topic that's obviously very relevant to the industry, very relevant to the market in the way in which we're going through it now. And maybe if we start by having a bit of a look at the general landscape of what's happening in the cloud and the FinOps space. So, and maybe Ewan, if I come to you first, can you give us a bit of a definition about what we actually mean by cloud-based system? Because let's get through some of the basics first and then really sort of get into the more tougher questions.
Yeah, sure. So I suppose historically, companies bought their own servers. They bought their own infrastructure, their own SANs and their network storage and so on and so forth, and ran them out of their own data centers. Probably 15, 20 years ago, you started to get these companies like Amazon, Google, and so on and so forth, who started to offer out these capabilities over the internet. So they would host and run these servers. You would simply come along, make an API call, and be able to access the servers as and when you want. So access very quickly, very fast, relatively cheaply, gave a lot of startups and smaller companies the ability to scale quickly.
Very cool. And it sort of grew from, I guess, just being, is it my server, your server, our server, whatever, to much broader services, didn't it?
Yeah. So obviously it started off compute. So basically the CPU and network, the ability to move data across the network. And what happened over time was the cloud companies realized that actually people wanted to buy capabilities. So it wasn't just the CPU they wanted to buy. They wanted to start doing things like image recognition or security or things like that. And so you were able to, these companies offered out higher level capabilities, which ultimately has led us over the last 3 or 4 years into software as a service capabilities. And in the banking industry, I guess you've got BaaS, banking as a service capabilities and things like that. So Regina over at Weavr would know all about that.
And maybe I guess Stathis, coming to you on the next view around FinOps more broadly. There, I mean, that early days. I mean, it doesn't seem so long ago. We were talking about will financial services ever really use cloud in that way? And in some instances, it's sort of been not on purpose. They've used SaaS companies that use back-end systems that are in various different places. So they've sort of done it through other organizations. But increasingly we're seeing, big banking organizations as the likes that you referred to earlier on, really sort of embark on much more strategic journeys when it comes to cloud adoption. So how have you seen that transition? And then I'll come back to you on the FinOps thing in a second.
No, absolutely. You're 100% correct on the statements that you made. It used to be the case probably a few years ago that cloud was more about technology, and especially big banks, tier 1, tier 2 banks were a little bit more, I guess, reluctant to adopt new technology. It's more about strategic partnerships right now rather than technology itself. And FinOps is part of this conversation also in terms of how can I pick up a strategic partner that can help me both with technology, but also from a value-driven perspective. How can I do more in terms of increasing revenues, reducing my costs, or mitigating risks, and at the end of the day, innovating at the right speed with the right level of risk, essentially.
Yeah, and that's really what it comes down to, isn't it? I always say, risk is a business decision. People take different levels of risk for different things, and that can pay off or it can't in that way. But I guess cloud was seen as a risky thing to start with. But I guess this is where we're sort of talking a little bit where it's not really where you want to get to, it's where you're starting from, isn't it? The banks have struggled a little bit with this because they've started from, 5 different data centers, and if you go in them, we will shoot you type, feelings to actually, well, what do we need to be good at? And actually, I mean, I remember, I think it was 2 or 3 years ago now, actually speaking at an event for Google, actually, and one of the panelists was the CEO of one of the challenger banks in the UK, and their opening comment was, never in any part of starting this bank did I think, where are we going to put our data centers? And it's like, yeah, exactly. You start from a fundamentally different place, don't you, in that way? So maybe if we come back to FinOps then, what do we mean by FinOps? What does that... Because obviously those fintechs that are starting in cloud and building from cloud, this has quite a big impact for them.
Absolutely. And FinOps is more about the culture of an organization. And according to the FinOps Foundation, it is a cultural practice, essentially, right? It is a set of behaviors and processes, the how and what, about how an organization can bring essentially financial accountability, ideally at the granular level of individual. So that's one component. And the second component that FinOps aspires to bring to an organization is essentially to accelerate the business value realization. Ideally, every individual in an organization has to have a view of what $1 spent on cloud or technology can bring to the organization from a value perspective, from how does it impact the North Star of the company, essentially. And this obviously touches a lot of functions, a lot of teams, etymologically, FinOps comes from finance and operations, so predominantly finance, operations, and engineering, but also product and all the value-generating units across the company.
It's interesting, isn't it? It's the fact that you started with culture. The fact that actually, at the heart of Ewan, every big client meeting we're at, you roll out Conways law at some point. The technology facilitates the process, the operating model, and the operating model is kind of a manifestation of the culture of an organization in that way, isn't it? So, it's interesting that FinOps has such a cultural part within organizations, Ewan.
Yeah, I think, culture is fundamental. And you made that point earlier about sort of the Challenger CEO saying they never cared about their data centers. As you know, I've built 3 or 4 startups and all based on the cloud. Never considered where a data center would go. Actually, it's like, how do you get the teams working together? How do you get product working together? How do you get engineering working together? How do you get compliance and finance working together? It's looking at the world in a fundamentally different way. And, as you say, we'll always talk about Conway's law. Conway's law is something that came out in the 1960s. It really says, your organization reflects your technical architecture, but also your technical architecture reflects your organization. And actually, if you want, and the two things are highly interlinked, and if you want to change your culture, actually, the way that you go about operating your business, and nowadays that means technology, is fundamental. So actually, if you've moved to a cloud-based world, you're going to be a lot more agile. You're going to be a lot more under control of a lot of things. Whereas if you in an old-style monolithic world, things are just going to be slower and they're going to take more time.
Yeah. Regina, why does a chief financial officer care about this? Because actually, in your role, and I guess back to what Stathis was saying, actually, in terms of the breaking down of those silos and those cross-functional things, this isn't just a CTO conversation, is it?
No, not at all. So at Weavr, I'm lucky enough to be able to handle a few things. I handle finance, compliance. I handle what we call banking, which is all of our banking relationships and our financial provider relationships, all the licensed entities that go with us, and also legal and HR. So very, to some degree, independent type like organizations that actually are also very data driven, right? Which is why this conversation is so exciting. For us, FinOps is 2 things. One, it's exactly what Ewan is saying. There's a technology component to it, right? And how do you make it, as efficient as possible? But there's also a financial side to it for us, because in financial services, financial operations is such a big part of everything that you do. In fact, operations is what makes financial services run. Without it, financial services just cannot happen. And most of the time, the layman doesn't realize when they press the button. There's actually quite a few processes and policies behind the scene that if they weren't actually technically driven and efficiently driven, your money won't arrive, right? And so that's actually a big thing, probably dating myself a bit. I still remember the days of physical on-prem servers and data centers, where we worried when there were, for example, floods in Florida, would it actually create problems for our data centers, right? And now everything is cloud, and you don't even think about it, but instead now you're thinking about efficiency, how to get the data most accurately and most quickly, and how do you also give people access to all of it incredibly quickly, and even migrations, right? And through this integration, one of the big things that we're talking through is how do we integrate? And we're so thrilled that they actually use some of the same systems, which will make our life so much easier.
That's great. As you say, it's something that touches sort of all parts of the organization then, isn't it? Not just, and not just, how long, as you say, we're going to date all of ourselves at this point, aren't we? But, I remember one big bank we were working with, gave us a 6-month lead time to spin up an environment for them to be able to start doing things with, and that just seems laughable now, doesn't it? In terms of the processes you go through and the pressing a button and having all of those things at your fingertips to really make those things happen. But I mean, I guess Ewan, coming back to you on this, I mean, why has it sounds like we've just built such an obvious answer to this, but like, why has the industry embraced this so much? Is it the necessity of speed of change and changes in the market more broadly, or is this just the direction of travel? Like, is it inevitable because we've seen this pattern roll out in other industries?
I think it is almost inevitable, but not completely inevitable. So, cloud has meant that people can access servers very, very quickly. They can access these capabilities we were talking about earlier very, very quickly. And so, what matters in a modern world is that speed to market. And so cloud plays into that. You're not spending 6 months and, God knows how many hundreds of £1,000s racking and stacking a bunch of servers. However, I think there are downsides to this. The costs do rack up over time, particularly if you use a lot of these services and don't have them under control. And I think we are starting to see some people in the future just bringing a bit of this back in-house. It's not necessarily running your own data centers, but people are starting to engage with people like 37 Signals over do a deal with Dell. Actually, they're cutting back on a bit of their cloud spend. But that's something to look at to the future.
Yeah. I guess, Stathis, looking at this and sort of standing back a little bit, I mean, you work with organizations kind of globally in different types of markets at different sort of levels across this journey. I mean, is this something that you're seeing embraced differently when it comes to, emerging markets than it is more developed markets?
I think there is a little bit of a difference across the two, and also there is a difference across across the spectrum of financial services. So I see different things and different levels of adoption, for example, in the likes of hedge funds, where maybe really low latency trading is something that cloud is just not ready yet, and some aspects of technology need to be co-located, for example, in a physical space. The vast majority of the spectrum in financial services is a very good fit for cloud. And I'll go back to one point that Ewan alluded to at the beginning. So we usually talk about the 3 waves of the cloud evolution over the last probably 10 years or so. If you think early 2000s, probably everything was about virtualization. How do I reduce my costs, essentially? How can I bring everything in one place and reuse the same technology, right? A little bit later on, it became about OPEX versus CAPEX. Do I want to make upfront investments in terms of capital expenditure, or should I pay as I go, for example, for the services that I need? And we do see a big shift over the last probably 4 or 5 years towards value-add capabilities. So it is again about virtualization, cost reduction, managing costs, for example, in a better way or in a more efficient way. But it's much more about being able, for example, to leverage technologies like data, analytics, machine learning, and AI right out of the box without necessarily needing to heavily invest in these capabilities in-house.
It's an interesting one, isn't it? If you can turn on services as taps to benefit your business, then actually the business case for doing it is very different, isn't it? And I think across the board, I think we're seeing that shift really of within big organizations. If you've got to wait 2 years and, I don't even want to put a large number on how much investment to get there, and you only really start getting the ROI at the end of that, that's a very different journey in that sense as well, isn't it? So, and I guess that sort of goes to the point you were making earlier on around the, in the period of time that we're in, predictability of finances and the operational cost that goes around that is probably more critical than ever. And maybe if we at that stage sort of take a bit of a look forward, because Regina, if we come to you on that one, that we're in tough times, right? Like there's no denying it. The economic pressures globally right now we're in a weird place, right? So fintechs are sort of walking a bit of a tightrope more than ever before, and predictability is probably more critical than ever before as well, right?
Yes, absolutely. So there's a couple of things, right? If you're lucky enough to be able to set aside the budget you want to set aside for technology, right? Then you'll be able to do all the things that you want to do because it just feels freeing and flexible to build what you want to build. Oftentimes, automation is to make sure you get to the next step much, much faster, right? Which is what we're all talking about here on this podcast. However, at the same time, too, if you're not sure what you need sometimes, which oftentimes, earlier stage companies are still trying to figure that out, you might actually buy services that you may not consume. And then therefore, perhaps you're actually setting aside too high of a budget by accident and not really realizing it, right? And so to some degree, we absolutely appreciate there are multiple services now being packaged and being part of what you can actually buy for servicing. But at the same time, too, you may not need all of it. So perhaps are you actually overspending by accident? So sometimes, one of the things that also happens is that you might buy a longer term commitment type of contract, but then at the same time, too, as it is with human nature, you might feel you have the luxury to go and check to see if everything is used, and then maybe it's not as managed as you like it to be managed, right? And that's also the other side of having a bit of an open budget on things. To some degree, that's part of the danger is too strong, certainly, but that's sort of the other side of having so many things available to you. And of course, in finance, we're trying to be, to your point earlier, as predictable as possible, as lean as possible, and it's not always too easy to know those fine lines.
Yeah, I guess Stathis, on your side, have you seen any shifts in this as well? I mean, there's obviously 4 fintechs, 4 big gigantic banking organizations. It's a tough period, tough economic times. Are you seeing any changes in how cloud adoption or the budgeting for that is shifting?
Yes, indeed, absolutely. And just one comment on the predictability aspect of things. I think more recently, it's more about right sizing in real time or in a much higher frequency rather than predictability per se, because you can have predictability, for example, if you invest upfront for the next 5 years. But especially if you think about fintechs, if you have runway for 1 year, 2 years investing and having predictability for a much longer horizon it's just not the right thing for you, right? So to your question, David, yes, there is a shift. And essentially, if you think about the last 1.5 years, especially after the pandemic, obviously due to the geopolitical events that we all know, and also recent events over the last week, probably with what is happening especially in the financial service industry, there's a big shift from growth to the notion of unit economics. So it used to be the case that 2 years ago, everything was about growth, right? If you were able to credibly demonstrate a high growth potential and to be able to map technology to that aspect, then you were in a very good place, right? Now, what you actually need to demonstrate is the link between the cost that you are incurring from technology, using technology, to your main KPIs, to your main North Star, be it user acquisition, be it lifetime value, customer acquisition, AUM, asset under management, or anything else that everyone else is using as their North Star. So that's the main shift that I see in the market right now. There's a much more focus in terms of what does my cloud spend mean from a business point of view.
Yeah. I mean, I think that's quite an interesting, I think I could go off on a tangent here for like another hour or just on that one, quite frankly. So I don't know if anybody's got a meeting after this. Yeah, you do. Okay. But actually, that's an interesting topic in its own right, because, and I'm looking at producer Laura to make note of this one, because actually, when you think about the sort of evolution of where financial services is going, data centers just used to be data centers. Is where you kept the data, right? And the data was about customers. It was data about your products. And then it was probably like some sort of relationship between the two of those things, because hopefully your customers had some products, right? So, but in a increasingly experiential industry, then actually we are using cloud services in a very different way to provide services that we orchestrate for end consumers that may or may not be the facilitation of the things that fundamentally underpin those business models. And I think that is a really interesting one, because arguably it ends up putting more load on cloud services because of the experiential nature of financial services going forward than it would do just to facilitate the things that sort of deliver on the business model side of things. So, I mean, Ewan, in like 2 minutes, what do you think on that? Because like literally that's a series in itself, isn't it? You know?
Yeah, I totally agree. I think Laura needs to start writing a whole bunch of podcasts here. I think you're true. It's correct. It's once you can access these services. And actually, you can start trying things and you can offer them out to customers and you see which ones bite and which ones don't bite. You kind of almost get almost an exponential growth in usage, which obviously is going to, I guess, have a very big impact ultimately on your back-end server usage and so on and so forth. So your costs will also go up dramatically. And I think this is the point where you need to make sure that actually the stuff that you are spending your cloud services on actually have a direct customer profit feedback. Otherwise, you can have great customer experience, but actually you're not really earning much money out of it, and it can cost you a lot of money.
Yeah.
So I think being able to really get the entire business focusing on the actual end-to-end metrics, both key customer metrics, the NPS scores or whatever it might be, and also the cost to serve those capabilities, I think are really important.
Yeah, and is that really? And I mean, that was a very good summary, Ewan. Maybe we don't need that 4 hours of other content now because you smashed that then. But I mean, Stathis, is that the point in this? Is that how cloud-based solutions can help fintechs to really manage these times? Because so long as you're making sure that actually, like, I don't mind my costs going up if my revenue's going up, right? And actually, if you're in a situation where you can predictably manage those things and monitor them, as Regina said, much more proactively than you would have needed to with much greater level of investment than, digging a bunch of holes and building a bunch of buildings and putting a bunch of data centers in them, then is that how this is being managed more effectively?
I believe so. And you can think it from another perspective. If you think of most of the most successful fintechs, for example, but this is the same across the startup landscape. We're talking about exponential growth. At some point, they are very successful. There's a tipping point. More and more customers are coming in, and then you grow and you become a large company essentially, and you are successful at the end of the day. Now, how you support this growth? It means that when things go well and you have this exponential growth, you need to increase your technology footprint to support that growth, but not to increase the footprint exponentially, maybe even sublinearly, meaning that you still maintain a very, very healthy margin. And the other side of the coin is what happens when the economic reality changes, right? As we've seen probably recently. So you might not need as large a technology footprint as you used to have to support this exponential growth, right? But you still need to keep going. And if you think in terms of cloud services, either as storage and compute, which is the simplest flavor of cloud to think about, or as value-add capabilities, this is basically what cloud is able to offer, right? So you can basically spin up services and you can spin up the technology footprint when you actually need it. If you don't need it, you can dial it down. And if you need to try out additional capabilities, like we see recently with large language models, for example, do you go out and start hiring highly sophisticated data science teams? Yes, maybe that's the right thing to do. But if you want to try things out first, maybe you can start pinging some APIs on Google Cloud, for example, and you can start first proving the value, and then you can, in parallel, formulate your strategy, your longer-term strategy.
Yeah, I mean, it flips the model, doesn't it? First, you used to have to do a lot of strategy and prove the business case to then go and do the thing, and now you can test it and put it in the hands of customers, and then figure out what works to then scale it. Which it's a very different way. Ewan, what do you think?
Yeah, no, I agree. I was just actually thinking about when Stathis was sort of saying, the exponential upside makes perfect sense, but dialing it back when things go so well. And I'm curious, Stathis, sort of how often do you see people actually dialing it back? Because that implies a certain level of, what's the word I'm looking at? Experience and understanding of your cost model underneath it to do that sort of stuff. And a lot of people, I think, will just leave these services running. And so their costs are going to be quite high. And there's probably a lot of opportunity for people to dive in and say, actually, do you know what? Do I need to be running a large virtual server here? Can I run a small virtual server, or so on and so forth? Are you seeing many people actually actively do that on a day-to-day basis, or are they just generally just leaving the servers running as it was?
So there is, as you can imagine, probably, Ewan, there is a wide spectrum of different customers and how they react. But yes, I do see that. And in fact, I have recently worked with two very large Fintechs here in the UK, for example, to help them to adopt the FinOps framework and see how they can dial down or rationalize their cloud spend, in fact. And if you think in terms of how operating models like FinOps can help, usually we talk about three main components: inform, optimize, operate. Inform is about cost allocation mostly. How can you have a sense about what are the main cost drivers? For example, how can you report back costs to the teams that are incurring the cost, for example, and how can you more granular forecast what is coming down the road? Optimizing can be both about product optimization, how can you right size the technology, essentially, but also from a commercial point of view. How can you leverage your cloud partners to have more credits, for example, more support, more commercial support? And last, operate is about how do you measure the actual value. And if you think that the cloud spend is not commensurate to the value that you are getting, basically there are, loosely speaking and oversimplifying, there are two main ways to increase your profit, right? Either increase your revenues or reduce your costs. When the economy is not thriving, but you're still doing rather well, one of the main drivers is to see where there is a little bit of leeway and try to dial down your costs. So yes, long story short, I do see both of these customer segments, and recently over probably the last 6-8 months, I have seen more and more interest in terms of actually putting that in practice, dialing down the costs.
I mean, it's fascinating that point, because I mean, in the market that we live in, you know, the changes that we're seeing. You know, I mean, I spoke to a group CIO yesterday who said almost word for word what you just said, which is, look, we can't do anything that's really sort of changing the industry now, but we definitely sure as hell can do something about the cost structuring inside of our organization, particularly given we operate in so many different countries. So how do we, to your point on that non-linear growth from a cost perspective, it kind of works the other way as well, right? It's something that, again, I know you and we've spoken about a lot, but big banking organizations using systems across countries to rationalize and decommission systems, and it's the dream, but there's so few people that you've seen really sort of see those things through. But all right, we're going to take a very short break. We're going to come back in a little while. We're going to be talking about the future, which is always exciting, isn't it? Back in 2 seconds. This is Fintech Insider After Dark. We are breaking out of the studio and bringing it to the community. It's a live recording of the Fintech Insider podcast featuring your favorite hosts and big name guests.
Well, thank you very much for having me back.
Join us and become a certified Fintech Insider. Whether it's beers in London or pizza in New York, catch up with Fintech geeks and make new friends across the financial services ecosystem.
This is packed out, right? It's standing only.
We are bringing After Dark to the Steel Yard in London on the 29th of March. Click the link in the podcast description or visit 11fs.com/After Dark. Thank you very much for joining us, everybody. Good night. Okay, so we've talked about the current landscape and the challenges that we're seeing. So for this final section, we're going to be talking about what's going to happen in the future, which is always a laugh, isn't it? Because we always get these predictions wrong, but let's see where we get to. Regina, maybe if we start with you, how do businesses balance long-term future planning with really sort of riding out this turbulent time? I mean, this is a big question to start this second half with, but what do you think? I mean, what does the future hold for those businesses who are looking to manage this more effectively?
Yeah, so perhaps I could talk a little bit also about just the general environment, right? Every startup, fintech, etc., anyone who is an investor-backed company, especially in general, are worried probably about runway, as we've sort of mentioned on the call already, how much money do they have? And then also, how do they show that their economics are actually improving over time while growing incredible amounts, right? So that they can hopefully strike hot on some of those valuations that they want. And it's difficult. There's no guarantee that the valuations that we had back in 21 will come back in the near term future, right? So that does mean things like Stathis is saying is really important to showcase that as your revenues are growing, hopefully exponentially, that your unit economics are also coming down, also hopefully exponentially as well, right? When that happens, then the investors or anyone who's interested in the company is actually seeing a very efficiently run company, right? And there's sometimes perhaps, a question on, if you really are very tech driven, why aren't you running in that way? Surely you are able to manage your costs, not just only at the total number and how many pounds, how many euros, right? But also just the unit economics or the percentages at which you calculate your returns on. So to some degree, that's regardless of where you are and what industry you're in, that's sort of the environment that we're looking towards. I think, though, however, longer term too, it would be the hope to be able to understand what you need the services for, because that also contributes to hopefully more efficient use and consumption of what you're working on. If you can also provide efficient systems that are also very customer friendly and great customer experience, as Ewan is saying, then also at the same time too, you may not need to charge really high prices for that to access your services, right? Which then at that point, you're actually changing the whole ecosystem of both your cost management, your business model, as well as the pricing that you may be offering and charging to your customers. That would be really great if we went down that route. So
Definitely. I mean, do you see on that front then a sort of a balancing act between sort of organizations thinking, strategically in the long term or short term? Or, I mean, you could sort of have your cake and eat it a little bit these days, can't you? And that, back to my point earlier on, it's not that gigantic investment up front to be able to then test things. It's a different way of doing it.
Yeah. And actually, that's one of the great things about to be in tech today. You can really do that more agile test and learn methodology. And as probably everyone knows, oftentimes early stage companies are still learning and testing, and they may be using money in that way, which doesn't sound very efficient, but that's effectively the way to become more effective and efficient in the future. I would also say that to some degree, that also makes your internal run differently, because the culture of how you view how to run services and how you also want to consume those services for yourself also becomes part of the overall culture of what you want to do. If you can get fast and running, you can also provide the great service and do it in an efficient way. From an investor's perspective, you're kind of a bit of a dream.
Yeah. So I guess on that note, Ewan, I mean, this is but you've just said like 3 businesses you've built are all cloud-based. I mean, does fintech exist without cloud? Like, can fintech exist without cloud? And I mean, is it some sort of nuclear holocaust we've gone through to end in that result where we're somehow the fintech? Like, can it actually sustain it without cloud?
I don't think any tech startup can really work nowadays without cloud. If you look at it pre 2008, there was very little, there was a lot of startup capability, but it took a long time to grow. It was only once sort of AWS and Google and so on and so forth came forward that suddenly you get this exponential growth in the Facebooks and the Twitters and the everyone else who came out of that stuff 10, 15, 20 years ago. Fintech is no different to this. I think if you're a small startup, you have to do all the stuff that Regina was talking about, to be able to try stuff very quickly, to be able to effectively put your credit card behind the bar and buy a server for 10 cents an hour, whatever it might be, try something and then shut it down is fundamental. I think that for the scale-ups, it's going to be slightly different. So once you've actually got product market fit, there is a different question as to whether cloud is the right thing to go for. I think people need to be a lot more sophisticated in the way they manage their costs. So, both Stathis and Regina have talked about actually people can downsize their costs if needed. I'm not convinced that many people are really doing that. So I think there's something there. So it might be that if for the scale-ups, the disappearance of the cloud would not necessarily be a bad thing, because they could go back to managing it in an older style way. But for the very early stage startups, it's fundamental.
It's interesting, isn't it? I mean, Stathis, I'm not going to ask you whether you think the cloud is a good thing or not, because you'll be doing yourself out of a job at that point. So, I don't want anybody at Google being like, yeah, we'll just shut that thing down, but it seems to be going well. I don't think they're going to be turning it off anytime soon. But I guess in a broader sense, and something that we haven't really sort of touched on is sort of like the regulatory side of things, because obviously, I mean, we work with organizations around the globe, and their confidence or comfort with cloud is really the maturity of the market, really. We've been very lucky here in the UK with the FCA and everybody getting comfortable with that in sort of, 2014, 2015 with the work that was done quite early on. But I guess with broader sense of the regulatory side of things, we're seeing, open banking, open finance. I mean, it feels like the cloud's got a very big part to play in that, in terms of the consolidation or the sort of orchestration of data from different sources. I mean, how are you guys kind of viewing that?
Yeah, absolutely. That's a very good question. And I would say that cloud is an enabler at this point in time. So as we were talking about essentially the reluctance of big financial institutions to adopt cloud a few years ago, I think it was the same thing with regulators and regulations, essentially. And after a while, regulators basically started understanding the cloud ecosystem. They gradually felt more comfortable with the checks and balances that are right now in place. And many of these checks and balances were put together in collaboration with regulators, in collaboration with FCA, with PRA, and other regulatory bodies. And I think this is also part of what gives confidence to large financial institutions, but also to smaller fintechs to actually use cloud and stake their economic future on cloud, right? Just to give you one very specific example, there is a upcoming regulation called DORA in the European Union. It stands for Digital Operational Resilience Act. There is an equivalent from PRA and FCA and Bank of England, basically, which basically articulates a few things. But one technology aspect that is mandated is essentially to be able to move your technology state under a stressed scenario from one cloud provider to another, or from on-premise to a cloud provider. So you have alternatives, right? If you think how you could go about that in the old world of data centers and caring about flooding your data centers in Miami or things like that, it was probably impossible, right? So I would say cloud in that respect right now is more of a hygiene factor rather than an accelerator, if we can put it that way.
Yeah, I mean, it's an interesting one, isn't it? The theory there was you had 3 data centers in different part of the UK and hoped that if the entirety of the UK flooded, then you had bigger problems to worry about, didn't you, at that point? But I guess it's interesting, the sort of failover, fallover, and actually, I mean, a big part of, again, you and a lot of the conversations we've had with people over the last 7 years is just like disaster recovery, and that doesn't have to be an actual disaster. It's like a release that goes wrong, and all of the benefits that really sort of comes with those things. So, I mean, it's things that you take for granted in cloud that fundamentally just weren't there in the industry before this really sort of happened. But anything to add on that, Ewan?
Yeah, I think I think this DORA is a great idea. The ability to move between data centers or between cloud providers is exactly what people need. But that actually requires quite a sophisticated capability internally, because the reality is different cloud providers will look at things in different ways. So actually the way that you architect your systems needs to be designed from day zero to be able to be cloud agnostic. So, probably you'll want to be running on a Kubernetes, which is sort of a scheduling capability that's industry standard. And most cloud providers will offer this service. There's also other stuff. I mean, David, we talk a lot about Wirecard, and when Wirecard went bust, a lot of people were basically stuck using their processors. So actually having that as part of your architectural systems to be able to make changes, even on a supplier level, not necessarily a cloud supplier, but an external supplier, and be able to switch very quickly is critical. But that's a very sophisticated view of your architecture. And I think very few people are actually capable of doing that today. But that's really where you want to get to, because if you can do that, a lot of the FinOps stuff is almost trivial. And if you can't do that, your finance stuff becomes very hard.
Well, I feel like we started this podcast doing basic maths and we've just gone to surds and like advanced trigonometry, but which is good. You know, leave everybody wanting more. I guess maybe as a final thought from everybody. I mean, look, is FinOps a key tool for fintechs to actually sort of ride out this economic climate? Do you think it's kind of one of those key things that people will have in their armory to get through the next couple of years, and whatever lays on the other side of that is up to that? But Regina, what do you think?
Yeah, no, absolutely. I mean, we've talked about so many benefits of it as well, but a lot of it also is about planning forward, which to Ewan's point, it's not so easy to do. I know we talk about that quite a bit behind the scenes, our partners. How do we make sure we're not so linked directly to them? If we need to switch, we can easily switch. The point on the regulators piece, which we were talking about, regulators actually ask those questions. So as part of the assessments that we have to provide, we actually have to provide backups, processors, suppliers, partners, etc., and actually talk about how we're going to switch over. The reality is it's not that easy to do, because oftentimes if you're trying to get up and going very fast, you're going to do it the quickest way possible, which isn't necessarily the long-term way.
Absolutely, yeah. I mean, sometimes necessity and the sort of mother of innovation in terms of getting stuff done, as you say. But Ewan, what do you think? Is this a sort of a, I guess through this period, a sword or a shield? You know, are we seeing it as a critical thing as part of the armory of fintechs to weather this storm?
I think it's fundamental. I think actually the downturn is good because it forces people to really look deep and hard at the way they run their business, the way their architecture is set up, their operational processes. If you can harden and make your internal processes better now, it'll be good for when the future comes, when the good times come in the future.
That's absolutely true. Get fighting fit. Stathis, what do you think? Is this a critical part of the armory for businesses to succeed?
Very much so. It's not the only thing probably that business need to do to navigate this landscape, but it's one of the most valuable drivers probably. The whole notion of being able to back up your unit economics, to actually being able to demonstrate this lineage between spend and end value from a business point of view, or even having the business level conversations with all the stakeholders with your organization. These are things that probably every organization needed to have, and this economic climate is basically a very good timing to actually get that in practice, right? And probably the healthy organizations are going to come out even healthier. The not so healthy ones probably are going to become a little bit in better shape after similar exercises.
Yeah, it's an interesting one whether by decision or necessity, then everybody who does come out the other end will come out a lot fitter in that way, as you say. I mean, it's been a fantastic debate, fantastic discussion. I mean, cloud often just gets so technical, but actually, you know, I love from the get-go on this, it's not really just about the cloud, it's not just about the technology, it's the operations, it's the culture, it's the things that it facilitates organizations fundamentally doing. And for us, I mean, when we talk to organizations around the world about this is the only thing you can optimize now for is speed of change and cost and change. And actually, cloud is a major driver of you actually being able to do that in any way scalable. So on that note, though, we're going to have to wrap up the show because we do all have other things I'm sure we all need to be going to. But thank you so much for joining me. Where can people learn a little bit more about you and the companies that you work at? So Ewan, start with you.
You can find me on LinkedIn or drop me an email, ewan@11fs.com. And I guess everyone knows what the company I work for, 11FS, does. So I'll leave it at that.
Very good. Regina, where can people learn more?
Our website is weavr.io, Weavr without the second E. You can find me on LinkedIn, Regina Lau, and you can certainly drop me an email, regina.lau@weavr.io.
Very cool. Stathis, where can people learn more?
Yeah, very, very similar channels of communication. So our website, google.com, my LinkedIn profile, and my email at Google is stathiso@google.com.
Very cool. As for me, I'm predominantly lurking on LinkedIn these days, so feel free to connect and happy to always chat. Thank you very much for listening. If you like what you heard, subscribe to this podcast and don't forget to leave us a review. It super helps and helps other people find the show as well. As always, if you want to join the conversation, you can search for us on pretty much every social media channel at this stage. Just search for 11FS or Fintech Insider. Or if you really want to, you can email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.